what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with
तेरे हाय ले गए ने दिल दा चैन मेरे रूप रंग ते रब भी सच्ची सदके जाए तेरे शहर च कहर तू है पौना तेरे जिन्ना सोना होर न होना हुसन बॉलीवुड नू मात तेरा पावे स्माइल तेरी तमार ही जावे तेरियां सिफतां च लफ्ज भी बड़े घट पै जण मेरे होर रूप रंग ते रब भी सच्ची सदके जाए तेरे नैन तेरे हाय लै गए ने दिल दा चैन मेरे रूप रंग ते रब भी सच्ची सदके जाए तेरे तेरे बारे सोचदियां हो जांदा दिन तो रात है फैशना दी सूट तेरे अगे की औकात है पर जदों सामने तू आवे धड़कन बददी मेरी जावे महक तेरी सा मेरे चुरावे दिल दी गल दिल च ही रह जावे चन्न भी सड़दा होना नूर देख तेरे चेहरे होर रूप रंग ते रब भी सच्ची सदके जाए तेरे नैन तेरे हाय लै गए ने दिल दा चैन मेरे रूप रंग ते रब भी सच्ची सदके जाए तेरे बस होर होवे ना जरा भी मेरे तो इंतजार दिल करे बोलदा प्यार दे जो लफ्ज ने तीन चार हो दिल तेरे कदमां च रखे अजे करदा हां इजहार के जानो वध ते हदों ज्यादा तैनू करदा प्यार की दसां की है हाल मेरे दिल दा तड़पदा बड़ा चैन नहीं मिलदा मखोल कर देने यार भी सारे तेरी यादां च गिनते ने तारे गल हुण मेरे वस तू बार हीर तैनू मन्निया रांझ जिहा प्यार है टुटे अज दिल मैं ना पाना सै तेरे बिन यार मर जाना है मैं हर सादी हो दुआ हर जन्म नाल होवे मेरे होर रूप रंग ते रब भी सच्ची सदके जाए तेरे नैन तेरे हाय लै गए ने दिल दा चैन मेरे रब भी सच्ची सदके जाए
I'm here at the Delhi airport and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome to the European Market Open. We're a minute to go until the start of cash equity trading. I'm Manus Cranny in Dubai. Your top stories today. High-stakes talks. Officials say Joe Biden has agreed to a summit with Vladimir Putin as long as Russia doesn't invade Ukraine. Markets take the cue. US and European equities climb on the hopes of a meeting, casting aside the forecast from JP Morgan for 9 straight rate hikes from the Fed. Living with COVID, the UK is set to announce the end of restrictions a day after the Queen tests positive. Warm welcome to the show. You don't normally get me, but today it's a special. It's Tom and Manus. Anna will be back on patrol tomorrow. Let's have a look at how we're doing on the equity futures. We have this diplomacy, which is driving a de-escalation of political risk, but at the same time, it's putting a little bit of a pep in the step of the equity market. Stocks 50 is up 1%, DAX up over 1%. As we have a de-escalation narrative this morning. The cash is open and trading. Let's see how it's looking. Tom Mackenzie's in London. Tom.
Manus, you point out really the geopolitics taking front and centre away from the central banks, arguably, though we will get data out later for the Eurozone that will build out the picture in terms of how we're looking at that important March 10th meeting from the ECB. But it's the geopolitics and it's the prospect of that meeting between Joe Biden and Vladimir Putin. We're still waiting for details on that, on how concrete that will be. But for the moment, it is lifting that mood after the week last week for European equities essentially ended range-bound, and a similar picture stateside as well. Of course, it's President's Day in the US, so markets there are closed, but the futures have been pointing strongly for the Eurozone. And here's what we're getting then as we switch focus to what's happening in the market today. Just in the first few seconds, the FTSE 100 is getting 0.6%. The pointer for the UK equities is going to be Wednesday and testimony from Bailey and whether we got more clarity on what's going to happen in March. Of course, investors pricing in a rate hike, but how aggressively are the BOE prepared to go? They got the CAC Cajon getting 0.8%. The Spanish IBEX also up 0.7%, or 58 points. Again, you're going to get Eurozone manufacturing and services data out in the next hour or so that will flesh out the picture in terms of the growth trajectory for the Eurozone. The Italian FTSE is gaining 0.6%. It was JP Morgan that came out with this call that they now see 9 consecutive rate hikes, 25 basis points for the Federal Reserve, bringing you into 2023. Will others get on board with that very aggressive outlook from JP Morgan? Markets now reducing their bets that you're going to get 50 basis points in March. Some of that on the back of some of the commentary that we got from central bank officials, Federal Reserve officials, towards the end of last week. Let's switch it on then and see how things are shaping up in terms of that geopolitical risk-on move that we are seeing. We had seen, of course, towards the end of last week, spot gold going above $1,900. It's now below that as some of these risk havens are unwound on the back of this prospective meeting between the two presidents. The futures, you're not going to get cash trading of treasuries today, but the futures are pointing to a bit of a bid for the 10-year. So yields ending below 2% when closed. And in terms of the futures, when it comes to the US equities, you're looking at gains then after what was a range-bound picture for US equities last week. And again, the yen, which had been a safe haven move, that's coming off a little bit as well. The dollar getting something of a bid. And again, the question mark is, are we going to get anything solid, particularly from the Kremlin, around this meeting? We know the drumbeats around that rhetoric and very strong concerns expressed, particularly about the US and the UK, saying essentially President Putin has already made up his mind when it comes to the question of Ukraine.
Yeah, and if you think about that was the narrative on Friday, and then he left the White House. It's a holiday in the United States. If we're so close to an invasion, yet he left, that's a big criticism that has come through. This is incredibly important for Macron, because he's had no wins with Putin, has he? So for him, the broker of a peace deal or the broker of a rapprochement between the two of them is critically important as he goes to the polls, and that's a big one for him. I think you're right, Tom. I think this whole narrative will shift to the Evans move. The Evans language from the Fed is that we need a substantial move, and if the PCE this week comes in hotter and higher than expected, the personal consumption expenditure, that could re-style the narrative around rate hikes. Tom, good to be back with you. Haven't seen you for a while on the telly, so we're going to enjoy the next hour. What have we got? Is it you and me? There's no name, but I'll go anyway. Shall I go? Yes, why not?
Go for it, Manus. Yeah.
Presidents Biden and Putin have agreed in principle, as you say, to this diplomatic summit. So what is it, according to the statements that the White House and France have agreed to? The US officials say it will only happen if Russia doesn't invade Ukraine. Meanwhile, the EU foreign ministers, they're meeting in Brussels today to discuss the latest developments. Moscow has repeatedly denied its plans to attack Ukraine. Let's get to Maria Tadeo. She is our Europe correspondent. She's on the ground for us. Maria, good to see you. So what can we expect from this meeting between Biden and Putin, if and indeed when it happens?
If and indeed when it happens, that is a big question, Manus. At this point, what we do know is that there is an invitation that has been sent out by the French to Vladimir Putin and, of course, President Biden to meet. The point of this meeting, of course, is to talk about security in Europe. Whether or not it happens will depend on Russia not invading Ukraine. That is the only precondition that it's being set out for this meeting. And, of course, we know that on Thursday, the Russian foreign minister and the U.S. Secretary of State will meet to prep this meeting. Now, in terms of what does an invasion look like, that is one of the big questions that I've heard this morning repeatedly from foreign ministers. Some will argue the reports of ceasefire being broken to the tune of 2,000 incidents in Donbass would already constitute or would already be an invasion of Ukraine. Of course, others say that as we're not there yet and we need to just be very careful and be very cautious before we make those assessments. But what I've noticed and picked up today here in Brussels is that you are seeing tensions between some of those that argue Ukraine is already under attack, and then two, when it comes to sanctions on Russia, this is probably the time to pull them out.
And there's growing talk about preemptive sanctions on Russia as a means of deterrent, really. And this particularly comes from Zelensky. It was in his speech at the Munich Security Conference over the weekend. You know, is that a call to arms, a call to sanction arms on Europe before there's any kind of an invasion, Maria?
Well, look, we just heard from the Ukrainian foreign minister who just walked by a few minutes ago, and he did, again, repeated what is very much the Ukrainian line when it comes to sanctions, which is what good is it if our country is invaded? At this point, it will be too late. At the Munich Security Conference, of course, President Zelensky, who, by the way, got a huge standing ovation from everyone who was present there, he also repeated the same thing. He said at this point, Ukraine is defending Europe. We are, in many ways, a buffer state between Russia and the West, and we need the weapons, and we also need the money. Having said that, when you look at the big countries of Europe, and I'm thinking, of course, about Germany, but also Italy, by the way, they keep saying we need to be cautious about these sanctions. We need to be ambiguous about it. We need to surprise Russia when it comes to the content and the people that could be hit by it. So if you look at unanimity at this point, there is unanimity about the idea that this will cost Russia dearly and it will cost Russia a lot of money. But when, that is still something where you clearly see there's no agreement. Yeah, and Draghi splitting away in terms of what might be on the plate from an energy perspective. Maria, thank you very much. Maria Tadeo there, catching the ministers as they go in. Let's turn to the key market drivers this morning. Christina Aquino is with me. She has some interesting perspective on volatility. We've got vol
in the ruble, nowhere near where it was during the Crimea annexation. But when you look at volatility, Christine, good to have you with me. What's the direction of travel?
Well, Manus, I think volatility has been moving generally higher this year, and it's no surprise because we have been seeing a number of catalysts that really introduce this concept of two-way risk in markets more than ever. And I think we're seeing that across the board as well, definitely seeing it in stocks, but also seeing it in bond markets, which generally tend to be a bit more calm. But that is definitely not the case this year. Of course, this has all been being driven by this idea of a sea change in monetary policy across the globe. The Fed, of course, leading that with expectations again from the likes of JP Morgan of the Fed delivering as much as 9 rate hikes this year. But, you know, it's a sea change for all central banks in general. And so I think, generally speaking, it's been difficult for traders to really get a sense of what the trends are this year because there is no such thing as a trend at the moment.
Indeed. And JP Morgan, I mean, this is the other big narrative for the Fed. They're talking 9 hikes. I've had several guests this morning saying that's just too far, too aggressive on the terminal rate from UBP. But what does that do in terms of shifting, you know, for the Fed this year? 9 hikes?
Yeah, Manus, I mean, that is definitely a lot more than what markets are currently pricing, which is about 25 basis point rate hikes by the end of this year. But, you know, JP Morgan is not the first to kind of have a call that exceeds what we're seeing in terms of market pricing. I think what this generally shows us is that the discussion is shifting a little bit from that idea of a supersized 50 basis point rate hike in March and more toward the longer term trajectory of the Federal Reserve. You know, we've heard from several officials as well commenting on this idea of just more broadly delivering, tightening throughout the year and keeping that momentum up. And I think that is what is reflected in the JP Morgan call as well. And of course, let's not forget rate hikes are only one part of the discussion. The lever that the Fed has in terms of policy also exists with their balance sheet runoff. That certainly is likely to get more attention as we move throughout the year, especially when they're trying to decide which securities they're going to run off first. I think the minutes indicated that they might start with their mortgage-backed securities and keep a preference for those longer-term treasuries, which could keep a lid on that rise in bond yields here.
And we've got this sell-off in China tech. I did it earlier. Tencent was down nearly 6%. People are concerned, and the regulators have made it very clear they're not done with regulation yet in the tech space. So what's the shift so far on this story?
Well, Manus, I think definitely something for investors to watch for sure. The tech sector in general has been battered this year for a number of reasons. Again, we're talking about that shift in Federal Reserve policy, but also just the idea of, you know, the tech sector not necessarily basking in that same glow as it had been over the last couple of years. Just what we've seen from the earnings season, investors are really paying more attention to the fundamentals and trying to differentiate which tech companies have more going for them, have this idea of sustainability moving forward, and which ones are a bit more flash in the pan. You know, I think there's definitely been a differentiation, for instance, between the big tech companies and also between big tech and this profitless tech sector. And I think that's just going to continue. Investors are going to be a lot more discerning. And again, that will just serve to introduce more volatility, more two-way risk into these equity markets.
Christine, thank you very much. Christine Aquino there with the very latest on what's going to drive the vol in these markets. To JP Morgan's note, the forecasts are for 9 rate hikes from the Fed. We'll put that to Janet Mew at Bruin Dolphin. What would that do to an equity story in the growth to value? This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Welcome back to The Open. We are 14 minutes into the trading day this Monday morning. There is a reappraisal of risk, and it is fundamental. The risk mood improves as the Putin-Biden summit may take shape. Now, the question is this. It's predicated on the view that Russia does not invade Ukraine. What is at risk here? That is what you must ask yourself. A fundamental question is this. Is this perhaps the grandest and most global stage that Putin could ever ask for? A moment to negotiate and walk away, a moment to negotiate and de-escalate. The decision tree analysis is endless, but for the moment, the market is banking on a de-escalation, and that is what diplomacy will do. And Russia has countless times said they don't want to invade Ukraine, despite the buildup of troops. To that end, you see the reduction in recession risk if there is a political agreement. European equity markets are up this morning. The DAX is off its highs of the day. Paris is up by 0.6%. Macron has real skin in this game, because if he's brought them together, Putin and Joe Biden, just think what that would politically do for him as he goes to an election. He needs a win from Putin. This could be the win for Macron that he needs going to the polls, rather than the spectre of higher conflict. That could hand something to the Le Pen camp. London's up by 0.6%. What's moving, what's shaking? Credit Suisse has a report that they were banking and doing business for people involved in a whole variety of less than acceptable businesses. They have denied that people were involved in human rights abuses. They say that they closed down many of these accounts. We'll get details on that later. Credit Suisse, as you can see, is down 0.5%. It was called a lot lower. Clipper Logistics, I like this one. Clipper Logistics, GXO has reached a preliminary agreement to buy Clipper Logistics. The price tag, £943 million, $690 in cash if you're a stakeholder, and the rest you're going to get some GXO shares. Stock is up 13.9%. I wonder, do I have any of that in the pension? Don't know. Galp, caught up with the CEO. Cracking conversation. He's talking about a buyback and certainly a cash dividend coming through there. So those were the top lines on Galp. Despite that, we're down 1%. It was Andy Brown. He spoke to me, and they are saying they're still scanning the market for renewable energy opportunities. Stock down 0.9% and change. OK, let's digest, take a moment, absorb, and think of the possibilities. The possibilities of a rapprochement, the possibilities of decreased tension between the United States and Russia. And then there's the Fed, JP Morgan, the economists out there with a big call. 9 rate hikes of 25 bips apiece. What would that do to your growth to value proposition in those set of meetings to tamp down inflation? Janet Murray has had time to reflect on all of this. Janet, good to have you with me this morning. At the moment, we're leaning into the de-risking by diplomacy as the narrative. How have you reacted, positioned, or changed any of your risk positions in the past couple of weeks on the spectre of diplomacy not working between Russia, Ukraine, and the United States of America and Europe?
Good morning, Menace. Thanks for having me. Well, we have not reacted preemptively for uncertainty in geopolitical events. We don't think it is a sensible thing to do because the situation is quite fluid. There is a lot of uncertainty, and obviously there has been a knee-jerk reaction in market in terms of risk asset. But I think we have to see how the situation evolves because there seems to be a lot of diplomacy going on, and it seems that it is in each other's vested interest not to escalate further. And so we don't preemptively react to that in terms of geopolitical risk.
And it's great to have you back in the studio, back in the main London set, so it makes for a very different dynamic and conversation. The big call this morning is the risk. It's one house, but it is quite a prescient house in terms of their calls. It's JP Morgan calling potentially for 9 rate hikes of 25 basis points at a time. Do you think there's a risk of that near term? Do you think that you could see yourself agreeing to 9 rate hikes as JP Morgan does? And what would that do, Janet, to the growth to value trade, the broad trade in the first instance?
So we don't agree that the rate hike profile in the U.S. will be as aggressive and as steep as JP Morgan has penciled in. 9 rate hike is actually, it is. We don't think it is going to happen. We think it will be in the range of 6 rate hike. That is what the market is anticipating at the moment. We think that's probably the max that the Fed may do. And that's really because I think the Fed is, they say they're going to be nimble. So what we think is that in the near term, consumer spending is likely to face headwinds because of inflation, and also the economy is slowing from the very rapid growth from last year. And what we are seeing recently is that the consumer confidence survey, for example, the University of Michigan confidence survey, is actually quite concerning. It's actually down to even the pre-COVID level. So it is a concern for us, and a consumer is really, really important part of the growth story. So in case we do see a bit of slowdown in that, it is very hard for the Fed to hike aggressively. And also our base case is that inflation is going to moderate from the second half of this year. It is still going to stay elevated, but it is going to slow down from the current level.
So what about the Bank of England then? If you think that that's a wee bit of a stretch too far for the Fed to do 9 rate hikes this year, and some are talking about that you do need a Volcker-style shock, Janet. So, you know, that is one camp. To the Bank of England, 4 voted for 50 basis points. Do you think that we'll get to 2% by the end of the year in the UK? What is the extreme on rate hikes in the UK that you expect?
Again, we don't think that the UK can see a very steep rate hike profile. So currently, market is, I think, pricing in about 6 rate hike in the US. It fluctuates a lot. I mean, at one point they price in about 7, and we don't see that kind of steep rate hike profile. I think the UK is even in a more serious situation in terms of the squeeze in consumer real income, because, you know, we all know that from April there will be a number of headwinds, including the hike in national insurance and also the energy price cap hike. So all these doesn't bode well for the consumer. And again, we don't see that officials will be reacting that aggressively. And if you actually dig deeper into the Bank of England's inflation forecast, they actually, based on market expectation, their inflation forecast is actually going to be well below 2% 2-3 years out. So they don't actually need to hike as aggressively as the current market profile have suggested.
OK, well, let's see whether they run into a stall mode as well. Janet, stay with me. Janet Mew, my guest this morning from Brewin Dolphin. The PMIs are in from France on the Purchasing Managers Index. Now, it comes in a little bit better. This is certainly going to be something welcomed by the Elysee as they go into electioneering mode. PMI services 57.9. The survey was for 54. And on the manufacturing side, 57.6. And this is really the composite 57.4. So certainly looking for a stronger PMI on the soft reading. The index a year ago was at 56.1, so we're still up on that. It's the highest reading since July of last year and the 15th month of expansion in France on the manufacturing side. We'll talk more about those numbers in just a moment. $100, ring a bell. That's the crowd. It's growing louder and bigger. The CEO of the world's largest independent oil trader, he says it could be around for quite some time. Triple-digit oil, that is. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
In our view, yes, we'll see, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. It's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, provided there's no additional worries about the pandemic and provided travel resumes to something like it.
Vitol CEO Russell Hardy there, speaking exclusively with Anna Edwards. Back with me is Janet Mewey from Brewin Dolphin. Janet, here we are. Everybody's talking about $100 oil. Look, the debate in that piece, and everybody should go to Bloomberg.com and watch Anna and Russell talking about this, is where demand destruction comes in. Do you see $100 oil, and how penal will it be to consumer confidence?
Yes, that's the question that our clients have been asking us, and I think that I agree. I think in the near term, I can't tell you the exact timing, but I think it could happen because I think primarily it's a supply issue. I think supply is obviously still very tight. You can see it across many data out there, and there is a reluctance for OPEC Plus to increase oil supply at the moment, and also there is reluctance from the shale gas oil producer to also drill for more oil. I think you can see that from the oil rig counts in the U.S. that's it's steadily picking up, but is nowhere near pre-COVID levels despite the current high oil prices. So I think demand is going to return in the summer when international flying would intensify.
Janet?
So I think the supply-demand balance still.
We'll keep an eye on that $100
oil.
oil. Janet Mewey, Head of Market Analysis at Brewin Dolphin.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open. We're 30 minutes into the trading day this Monday morning. There is a fundamental re-rating of risk. We'll get to that in a moment. The headlines this Monday: high-stakes talks. Officials say Joe Biden has agreed to a summit with Vladimir Putin as long as Russia doesn't invade Ukraine. Markets take the cue. US and European equity futures climb higher on the prospect of a meeting, casting aside the forecast by JP Morgan for 9 hikes from the Fed this year. Plus, living with COVID, the UK is set to announce the end of restrictions a day after the Queen tests positive. Equity futures are higher. There's a material belief that diplomacy will trump the escalation risk of conflict. European stocks up 0.5%. The Xetra DAX up nearly 1%. So we have absolutely spun it around. You're getting data across the Bloomberg terminal. February services in Germany rise to 56.6. The forecast was for 53. So that's a comfortable beat for France and Germany on the PMI. The soft services data is coming through nicely, but it is diplomacy that Macron has brokered, we understand, between Putin and Biden to have a physical summit that is driving the narrative this morning. It's causing oil to roll over, stocks to roll higher, despite the proposition by JP Morgan that there could be 9 rate hikes this year from the Federal Reserve. Do you think that could be? Now, this is G or. This is your global ranked returns in terms of the Stock 600, travel, banks. Australia's open. Anybody fancy a flight to Australia? It's open now. If you're fully vaccinated, you can get there. Banks are on the up as the prospect of higher interest rates and the narrative coming from Evans that we need a substantial adjustment in rates. JP Morgan are talking about 9 rate hikes. What would the UK and Europe manage to do? That shifts your banks higher, and your basic resources is all about the de-escalation of risk in the world, and growth and receding recession risk in Europe drives your basic resources up if there is a de-escalation and diplomacy does carry through. And obviously the PMIs are helping the narrative this morning as well. Well, from stocks to local currencies, there are pockets of emerging markets that are on the up. Aggressive central banks and high commodity prices are driving the advances this year in more than half of the 24 developing world currencies tracked by Bloomberg. And all of this despite the simmering Russia-Ukraine tensions. We're showing you a pretty powerful chart in the Bloomberg library. Lewis Costa is my guest, Citigroup Global Head of Markets, Head of EMEA Strategy for FI and FX. Luis, always great to get you with us. So we were just showing our viewers and our Bloomberg terminal users just the gargantuan number of EM hikes. 3,720 basis points, and the Fed's at zero. So in your world, monster hikes, but is it commensurate with monster and enduring EM returns? Good morning.
Good morning. Good morning to you. You're absolutely right. I mean, it's about what the curves are expecting, what the curves implying, and we know that the front end of the U.S. curve has already absorbed a lot of our Fed hike expectations. So it's not like the Fed is necessarily at zero. But, you know, I take that chart. That chart is telling us a lot in terms of how hawkish EM central banks have been throughout 2021 and the beginning of 2022. I mean, the Russians are still delivering hikes. Brazil also deliver a high. Some other LATAM central banks deliver hikes. So we might get more hikes coming from Poland very soon. So it's still an environment where this more defensive approach by EM central banks is continuously adding some carry cushion to EM currencies in an environment. You mentioned the French manufacturing, the German manufacturing, in an environment where we are not going basically to backtrack on this illusion that the ECB can be more hawkish, at least in the short term.
So there's a couple of things that I'm curious about. Last week, I dealt a lot with the carry trade and unwinding of the funding currency of choice in the carry trade. So if I want to be long, Brazil's up, by the way, to the dollar. Brazil's up, what, 8.5%? The Chilean peso's up 6.25%. What is the primary funding currency? Do I trade it on the cross against yen? How do you think the market is funding its EM trades at the moment?
Well, I feel that the market should be trading on a basket basis. I mean, we still believe that short term, there's a little bit more scope for euro upside. And believe me, I've been a massive bear on the euro for the past 2-3 years. But we do believe that a broad dollar will probably allow, euro FX to trade a little bit higher. But, we do like carry versus US versus euro. So we do like basket trades, buying Brazilian real versus euro and dollar, buying, South African rand versus euro versus dollar. Okay. I think that these are good trades to be in.
Luis, I'm going to interrupt our conversation for a moment. We'll pick it up together. There's a line coming from the Kremlin that there are no concrete plans of a summit yet for Biden-Putin. Now, this is critically important. We had said that there was the basis of a gathering to come together. Let's have a look at the riskometer, because I can tell you that you're going to see a very immediate reaction here. Yep, European stocks are slamming on the brakes. Here we go, Luis. Treasuries higher on the future. SPOOs roll over. Gold goes bid, and dollar yen money goes in. Let's deal with this risk-off moment. We're going to have to deal with a lot of these. We're going to have to deal with an awful lot of these. Right. So let's get the context. That's the latest breaking news headline. First reaction to that from volatility in FX in your space, in your world.
Well, it's unfortunately, it's a bit to the dollar. And we, as you said, we are going basically to live with this higher geopolitical risk for quite some time. It might take us into the spring easily. Now, not necessarily envisaging invasion, but we could be on the brink of something bad, for quite some time. But I wouldn't take those headlines, as something on stone. I think that's, there's still a very good possibility of better interaction, not only with White House and Kremlin, but also with Macron involved. So we know that there has been some degree of breakthrough over the weekend in the talks between Macron and the Kremlin. So people have to be patient, but we are not going back to zero geopolitical risk anytime soon.
Okay, and of course, then you get the second headline. You're right. We are going to live headline to headline and vol trade to vol trade. The Kremlin-Putin-Biden summit is possible if the leaders see the need for it. So you're right. There has been progress. We're going to deal with these incremental headlines piece by piece. So we've not given up all the gains on the S&P 500. We're up 0.5%. 10-year futures, Luis, are still down on the day. 636 30 seconds, if I'm not wrong. We're pricing on the bonds. Equity futures still hold the gains. They just par the initial sort of rally. Let's talk about the ruble. Okay, second worst performer in your space. Now, Valerie, who puts together the charts, Queen of Charts at the moment, is the resident title she's got the bears, she's got the options traders, and this is where I want to talk to you. It's the second worst performing currency in the EM basket, but they're building up the put option positions in this. Talk to me about the flow in ruble. A lot of people have criticized me when I say, look at the CDSs, look at them as being a litmus test. I've got lambasted for that. So tell me, what is the depth and liquidity in the ruble trade when I see put options trading at levels, the volume of trading options, the most bearish on the ruble since the aggression towards Crimea?
I think it's very interesting. It's actually fascinating because implied vols are obviously higher. They are obviously reacting to the crazy headlines and the yo-yo trading on a daily basis. But it's very interesting that flow-wise, we continue to see appetite by more dynamic investors, to capitalize on a potential dollar-ruble downside down the road, meaning ruble appreciation once geopolitical risk subsides. But, we also know that foreign position in ruble real assets, means bonds and equities, is still huge. It's still high, right? Despite the deleveraging we had since 2014 and 2018, but it's still a significant deleveraging that could happen if things continue to go south in terms of geopolitical and diplomatic efforts.
Okay, Luis, thank you very much. As you say, we live headline to headline, and we should caution as they drop. Luis Costa, Citigroup Global Head of Markets, CIMA. FX strategy and rates. My guest this morning on EM Markets. Coming up, diplomatic efforts to defuse the Russian-Ukraine tensions. They continue. We speak to the Ukraine's former ambassador to Austria, who advises Ukraine's national energy company, Naftogaz. The interview to come. This is Bloomberg.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
headlines are rolling in from the Kremlin. They see no concrete plans as yet for Putin and Biden's summit. However, they do say that there are specific agreements so far only on the foreign ministers to meet. The Kremlin says that a Putin-Biden summit is possible if the leaders see the need for it. So, you've got to work out between the lines. It sounds as if there is a breakthrough. We're just not 100% sure of the format or how definite it is. So it puts two-way risk back into the bid tone that you saw in the equity story this morning. S&P futures are coming off their highs. We were up over 1% at one juncture. We're now up 0.5%. So we've pared some of our gains on European stock futures and on the equity futures in the United States of America. 10-year yields, futures drop, yields rise, again, leaning into the JP Morgan story that you could have 9 rate hikes this year rather than the geopolitical tensions. And the ruble, actually, this is the dollar down and the ruble strengthening. And you have got positioning, pretty hefty put option positioning on the ruble at the moment. So you're just seeing the strength dissipate ever so slightly. Let's expand the conversation around the concept that President Biden has agreed in principle to meet the French proposal of a summit with Vladimir Putin. That is according to the White House. I've just updated you on the Kremlin's response so far in terms of the concrete nature of the plans. Maria Tadeo is set to have a conversation now with Ukraine's Foreign Affairs Minister. She spoke to him a little bit earlier.
Secretary Blinken assured me that, as it has been the case until now, no decisions about Ukraine will be taken behind Ukraine's back. And we will closely coordinate with him on the eve of as they will be preparing this summit.
And of course, Zelensky, the president in Ukraine, calling for sanctions before there's any escalation. Let's get to Maria. She's on the ground. She has a guest with her today. Maria Tadeo.
Yes, indeed, Manus. And now we're joined, of course, by Alexander Sherba, who's joining us from Ukraine. Alexander, it's a great day to be speaking with you. You have immense experience when it comes to diplomacy. You know the Ukrainian political circles very well, and you're also advisor to Naftogaz. So you put together all of the elements here. So I want to ask you, from your perspective, but particularly being in Ukraine today, what is your reaction to all of the headlines that we're seeing, particularly about this meeting between President Biden and Vladimir Putin? Is that going to be enough to de-escalate?
Good morning, Maria. Well, we in Ukraine live one day at a time. Quite frankly, last night I went to bed with understanding that there is a higher than 50% probability of a Russian attack next morning or on 22nd. There is no attack today, so it's going to be a good day. About the probability of Biden-Putin meeting, I asked myself what is new, what has changed, so that this meeting would be fruitful this time. But nothing should be untried, of course, to protect peace. And this is also maybe not an overwhelmingly good, but a good news.
And I have to ask you, of course, on Saturday, President Zelensky was at the Munich Security Conference. He did get a big standing ovation, but he also had a tough message. He said Ukraine needs sanctions and it needs weapons. Why is it so important for Ukraine to have these preventive sanctions? And by the way, the European Union is still saying that they don't have unanimity for this, that they want to wait potentially for an attack from Russia. In your view, does that make sense?
Absolutely. I mean, Putin, Russia has already done immense damage to Europe. I mean, how much less Europe feels right now, the world feels. It feels like a complete failure of the whole security structure, security order in the post-World War II world. So the damage has been done, and it cannot be unpunished. The point of introducing sanctions on Russia, it can be disputable. I understand that, and understanding how detached from reality Putin is, I understand the caution of the Western leaders, but you should understand also Ukraine, because we have a crowd of armed goons surrounding our house, and every morning we wake up and they're standing there and they're saying we don't mean anything bad, we're just standing there with all these arms and we want you, Ukraine, to give us guarantees of security, which is an insane situation. You should understand that.
Right. And of course, as the advice that you give to Naftogaz, I wonder, when you look at Nord Stream 2, the Ukrainian perspective, how big of a political threat is this pipeline, and do you still hope that Germany is going to ditch it?
Of course, this feeling of this, in-your-face attitude that Putin has, it's because the West was helping him and catering to all his wishes, including building these two gas pipelines, which are absolutely unnecessary. Ukrainian gas transportation system is covering both Nord Stream 1, Nord Stream 2, and some more. Europe can be supplied via our gas transportation system. So at this point, it would make sense to stop Nord Stream 2 and to say that if you attack, if you invade Ukraine, stop Nord Stream 1. Europe won't stay without gas. Russia doesn't have anywhere to deliver gas aside from Europe. No technical possibility for that. Most of the gas deposits in Russia, they right now can go only one way. So don't be fearful. Ukraine isn't fearful. You shouldn't be fearful either.
And Alexander, just a final question. Again, you say Ukraine is not fearful, but I do wonder, Russia does say the Ukrainian infrastructure is old, is not reliable, and the fees that you're making from transit, frankly, are not worth the money the buyers are paying for. What is your rebuttal to that? Well, this is what they do. They lie. They lie on industrial level. I mean, look at all the incidents that have been at gas transportation system towards Europe. Most of them were on the Russian side, not on Ukrainian. Our big advantage is we have a very versatile gas transportation system. We have not one, not two, but many pipes. If something happens at one pipe, we can go via different pipes. It's an immense huge gas transportation system that includes the biggest underground storage in Europe, where Europe can pump gas during summer when the gas prices are lower and then use it during the winter. So it's not about Ukraine's interest, it's about Europe's interest, and it's about Putin's game to cut off Ukraine as energy actor. Well, Alexander, thank you so much for joining us on Bloomberg. Of course, I was Alexander Sherba, former diplomat and advisor to Naftogaz. And Manus, a lot of this, as he mentioned, the energy conversation very connected to the political. And as he says, really for Ukraine, maintaining that transit and the transit fees for Russian gas into Europe is so crucial.
Absolutely, Maria. Great interview, great get. Maria today there with the very latest on Ukraine, Russia. A quick breaking news line on Ant Financial. Now, this is part of Jack Ma and Alibaba's empire. China is telling banks, this is a Bloomberg scoop, China is telling banks, state-owned enterprises, you must report your exposure to Jack Ma's Ant Financial. Now, this is part of a much bigger scrutiny and review of the billionaire Jack Ma's financial empire, according to people familiar with the matter. You've got multiple regulators, the banking watchdog, telling institutions under their oversight to examine their exposure to Ant, its subsidiaries, and even to shareholders up to January. So this is certainly going to weigh on, well, it can have an impact on Alibaba. This is the Hang Seng Tech Index, as you can see over the past 5 days, down 3 1/8%. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. Boris Johnson is set to announce an end to England's COVID-19 regulations a little bit later, a day after the Queen tested positive for the virus. Let's bring in Leanne Guerin. She's been tracking the story. So, Leanne, what are the details of living with COVID? What is the plan?
Manus, it's great to see you again. And guess what? Boris Johnson is about to announce this plan. And he said it is a moment of pride for the country. So we're expected to hear later today, if you do test positive for COVID-19, you'll not have to self-isolate by law anymore. So we're going to get new guidance into the precautions around testing positive. We're also hearing that the government is set to unwind its access to free lateral flow and PCR tests in the country. This is because they are costing about £2 billion each month. And as more people do receive vaccinations and hospital numbers do go down, the government is now confident that people can get back to work, Manus, and that people can also be safer as long as they've had their 3 vaccinations. So positivity here, and we are expecting Boris Johnson to make that living with COVID plan announcement in Parliament as everybody does return from recess. But of course, this comes at the backdrop as Queen Elizabeth did test positive for COVID-19 yesterday. The 95-year-old monarch is said to be experiencing mild symptoms. And you know what else, Manus? Let's see how this new unknown goes for the country.
Oh, there you go. There's the breaking news. Leanne, thank you very much. Leanne Guerin with the very latest on living with COVID. That's it from me. The back to normal tomorrow. Don't worry, Anna is coming back. European market open. Next up, France decides. Francine Lacroix on tour à Paris.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that of business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Emmanuel Macron's big diplomatic push. The French president proposes a diplomatic summit between Joe Biden and Vladimir Putin. The Kremlin says there are no concrete plans for the meeting. The polling places the presidential incumbent as favorite to win the April election, but a crowded field of candidates is likely to make things difficult for Macron. And stay with Bloomberg. France decides. Don't miss our top lineup of exclusive guests today. Later on in the hour, we're joined by the French Finance Minister Bruno Le Maire and by the former ECB President Jean-Claude Trichet. You can send in your questions on IB Plus TV Go. You can also reach out to me on Twitter. Now, good morning, everyone, and welcome to Bloomberg's France Decides, a look ahead to this year's French presidential election. I'm Francine Lacqua here in Paris. Now, of course, the focus has been on the number of calls that Emmanuel Macron has done to world leaders this weekend. He's really been leading the diplomatic efforts to find a solution for the Ukrainian crisis with the U.S.-Russia diplomatic summit. Now, President Joe Biden has accepted in principle a summit with Vladimir Putin. That's on the condition that Russia does not invade Ukraine. Now, in the past hour, though, the Kremlin has said that there are no concrete plans yet for such a summit. The spokesman, Dmitry Peskov, says that it's premature to organize a Biden-Putin summit. Well, joining us now is our reporter on the ground in Brussels, Maria Tadeu, who's been covering this from the very beginning. So, Maria, first of all, what can we expect from the meeting between Biden and Putin if and when it happens?
If and when it happens, Francine, and that is really the big question today in Brussels, particularly because we've been big-time whiplashed by the comments from the Kremlin saying at this point there is no reason or no obvious reason to put a date on this summit. What we do know is that a lot of this is coming after a major diplomatic effort by Emmanuel Macron, who was really hitting the phone yesterday. He spoke twice with the Russians at 1 a.m. Moscow time. He was still on the phone with Vladimir Putin, and a lot of this will be preconditioned by the meeting that Sergei Lavrov and the U.S. Secretary of State Antony Blinken will have on Thursday. So they will prep, or in theory would prep the ground for a big meeting between the two leaders. But again, to be seen at this point, especially after the Kremlin says we just don't see a date yet.
Maria, there's growing talk about these preemptive sanctions on Russia as a means of deterrence. First of all, does it actually deter Russia? And is this what Mr. Zelensky has called for over the weekend? How much consensus is there around this?
Francine, this is the biggest topic this morning in Brussels, particularly after that speech from the Ukrainian President Zelensky on Saturday at the Munich Security Conference. He was very vocal, he was very passionate, and he did say, at this point, Ukraine is defending Europe. We are in the midst of this proxy war between the West and Russia. We need sanctions and we need weapons. Now, this morning, interestingly, a number of countries saying we want to surprise Russia and we want to keep it ambiguous. But when you speak to Baltic nations, and particularly the Eastern Europeans that are really very close proximity to Russia, they say at what point this is going to be an attack. Russia's not going to declare war. We're probably going to see attacks that will come by the thousands that we've seen this weekend. At what point do we say we need preventive sanctions?
Yeah, and I guess the million-dollar question also, which is what people have been trying to figure out, if the U.S. keeps on calling out Russia, does it make it more likely that Vladimir Putin actually moves, or does it deter him from it? Thank you so much for the roundup. Our European reporter there, Maria Tadeo in Brussels. Now, France, of course, heading for a tight presidential race. Voters go to the polls in the first round of the presidential election on April 10th. Assuming no one wins a majority, the top two candidates then take part in a runoff 2 weeks later on April 22nd. Well, my co-anchor Tom McKenzie is in London to look at the main candidates. Hi, Tom.
Francine, good morning. Yes, this year's presidential election presents a crowded field of candidates. Let's go take a closer look then at the main contenders. First up, the centrist incumbent, of course, Emmanuel Macron, the 44-year-old, just 44. The president is yet to officially declare his candidacy for La République En Marche. That's his party, of course, but the polling places him as favourite to win the election, though with a tighter margin than back in 2017. Far-right Rassemblement National candidate Marine Le Pen, she's been tipped to face Macron in the final round, like she did in 2017. However, she continues to face the challenge of detoxifying her party's xenophobic image while also pleasing hardline right-wingers. And Valérie Pécresse is the centre-right candidate for Les Républicains, initially seen as Macron's main threat. A faltering campaign so far has seen her slip in the polls. In the past, she described herself as two-thirds Angela Merkel and one-third Margaret Thatcher. Another contender for the right-wing vote is Éric Zemmour. The far-right challenger burst onto the political scene in France in 2021 after he shook up the campaign with his immigration zero rhetoric. And on the left, the main candidate is Jean-Luc Mélenchon, a staunch critic, of course, of Macron's economic policies. The 70-year-old has so far failed to get the momentum that gave him almost 20% of the vote back in 2017. Back to you, Fran.
Yeah, it's really incredible how, of course, this presidential race is heating up. I've been in Paris over the weekend, Tom, and really on radio, that's everyone talking about that. And we've also had a good listen to the main candidates. Now, stay with Bloomberg's France Decides. Don't miss our top lineup of guests. Later on this hour, we're also joined by the former ECB president, Jean-Claude Trichet. But up next, the French finance minister, Bruno Le Maire, joining us for an exclusive conversation. And you can send in your questions on IB Plus TV Go. Let's go to the markets with our Tom McKenzie. Hey, Tom.
Francine, so an hour into the trading session here in Europe, you're now range-bound across the benchmark European Stocks 600, pairing the gains that you'd seen at the open of these markets. That will be down to the geopolitics. It just becomes murkier with the Kremlin coming out saying there is no concrete date or plan for this proposed meeting that we know the French have been trying to organise between Presidents Putin and Biden. So you're currently down about 0.1% on the benchmark. You had seen some of these haven bids for the yen, for gold, unwind. That is starting now to push back to some extent because there's anxiety in these markets on the back of these comments from the Kremlin. The futures stateside, of course, there's no trading in the US today. It is a national holiday, President's Day. Futures, though, pointing to gains of 0.2% when equity markets do reopen. The ruble has gained. It's coming off a little bit from the earlier gains. Equity markets, by the way, over in Russia, taking a leg lower. And in terms of that gold picture then, currently down 0.1%, but it was lower by close to 0.3 or 0.4% earlier in the session. Again, investors reassessing where they want to be in terms of these havens, given the very murky picture out of Russia and the geopolitics. And of course, over the weekend, we had some very stark calls from the likes of President Biden saying that, in his view, Putin has made his decision to invade Ukraine. By the way, when it comes to the UK, you've got Boris Johnson making an announcement in the next couple of hours about removing the restrictions on COVID-19. And in terms of the data, we had some positive services and manufacturing data out of France and Germany. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Secretary Blinken assured me that, as it has been the case until now, no decisions about Ukraine will be taken behind Ukraine's back, and we will closely coordinate with him on the eve as they will be preparing this summit.
That was Ukraine's Foreign Minister Dmytro Kuleba speaking to Bloomberg. Now, joining us for an exclusive conversation is the French Finance Minister, Bruno Le Maire. Of course, it's election year, so we'll get onto the reforms. But first of all, it's really geopolitics, Mr. Minister. Thank you so much for joining us. Politics and geopolitics is really dominating with a huge, forceful role that France is trying to play in trying to ease the tensions. First of all, Minister, what kind of impact would sanctions on Russia have on the French economy?
It would, first of all, have a very deep impact on Russia, on the Russian economy and on the Russian interest. But it's time for de-escalation. It's time for diplomacy. And there has been a major breakthrough last night, thanks to the efforts made by President Macron. There is the possibility of having a meeting between President Putin and President Biden. The two leaders agreed on the principle of a meeting. And I think that we should all make the best efforts to make this meeting a reality. Once again, President Macron played a key role to trigger this meeting between the two leaders.
And of course, we know that President Macron also, called many leaders over the weekend. But we just heard from the Kremlin that nothing is on the table for the moment. So again, you put all the efforts diplomatically. If it doesn't work, what kind of sanctions should we be looking at?
I don't want to give too much details on the sanctions, because if we want the sanctions to be efficient, we have to trigger the sanctions when it's time to trigger the sanctions. But one point must be very clear. If there is any attack from Russia to Ukraine, we have a set of sanctions that are still available and that would hit the Russian people, the Russian state and the Russian economic interests.
Including energy, certain European leaders have said energy should be off the table. And how willing are the citizens of France to pay to make sure that the Ukraine is safe?
Once again, we are aware of all the consequences. And I will propose to my European counterparts during the next ECOFIN at the end of the week to discuss this question of the Ukraine situation and the economic consequences of the situation in Ukraine. But you know that we took all the necessary decisions to face such a situation, and I think that on the long term, the consequence that we must draw from this crisis is that Europe must be more independent as far as energy is concerned. We must produce more energy, and energy which is emitting less CO2. That's exactly the politics that has been proposed and decided by President Macron, investing in renewable energies
and in opening new nuclear plants in France.
So the scenario is still, quite murky, let's say, because there's a transition which France has been leading on. At the same time, there's still a third of European energy that comes from Russia. We could see elevated prices for gas and oil for quite some time. What does it mean for the economy? Are we at a juncture where actually suddenly everything could go wrong?
Once again, we are aware of the consequences that such a conflict could have on the European economy, on the energy prices. We already had a very big impact on energy prices over the last weeks, and we are aware of that. But the political principle is more important. We refuse any kind of attack against the Ukraine sovereignty. And President Macron has been very clear. He is making all the diplomatic efforts to have a de-escalation in the conflict and to have a meeting organized between President Putin and President Biden. But one thing must remain very clear. If there is any attack against the Ukraine sovereignty, we stand ready to react.
Minister, for the French citizens, you've also capped higher energy prices at 4%. What does it mean for EDF shareholders? Are you willing to compensate them?
You know, we took that decision because it would have been unbearable for both the French population and for the French companies to have such an important increase on energy prices, on the electricity prices. It could have been more than 35–40% of increase in energy prices. That's why we took this decision by getting rid of the electricity taxation, 8 billion euros less for the French state. We also ask EDF to make an effort, but once again, the key purpose of that was to reduce the bill for both the French people and the French companies.
But Minister, why just not nationalize EDF then, take it out of the market, given the huge price
That's
swings?
another question, but for the time being, the key question for EDF is to have fresh money. And that's why we decided to provide 2.1 billion euros to EDF, because the key question for EDF now is to have fresh money, to face the difficult situation, to go through that difficult situation, and also to invest in the plan that has been decided by President Macron, more renewable energies and 6 new nuclear plants.
So, Minister, would you rule out actually a nationalization of EDF or taking
I'm
it out
not
of the
ruling
markets?
out any kind of solution, but you know, if you want to be efficient, you have to go step by step. The first step is to provide fresh money to EDF. Then we have time to think about the best structure for EDF.
How long do you think these elevated prices for gas and oil will stay? And how much pain is it? If it's a year, how much more subsidies can you put in place?
I think that everybody must be aware that till there are some geopolitical tensions in Ukraine, and taking into account the fact that there is a very strong economic recovery in the United States, in Europe, everywhere in the world, which is quite good news for all of us, we will have to face an increase in energy prices. And that's why we need to have a short-term approach, which is to protect the people and the companies against this increase of energy prices. But we also must have a long-term approach, which must be based on new investment and also a new European electricity market, which must be more efficient and less costly.
But, Minister, this is short-term, and then longer-term you go to the transition. What happens in the middle? For how long can France actually help with these prices and cap them?
We will stick to that policy until we have a decrease in energy prices. I don't want the French people to pay for the climate transition and to pay for this increase in energy prices. I think that it would be unbearable for the French population, and it would be also unbearable for the French companies. So we will stick to that policy over the next weeks, over the next month, and we are at the same time investing a lot of money on new nuclear plants, renewable energies and hydrogen.
If Emmanuel Macron, as actually a lot of pundits are expecting him, I think they give him an 80% chance to be elected. Does that seem fair?
I hope that Emmanuel Macron will be re-elected, of course. And I think that if Emmanuel Macron is re-elected, but for the time being, he has not made any announcements about his candidature. But I hope that he will be candidate, he will be re-elected, and we will stick to that economic policy that gave us such positive results for the French population and for the French nation.
Including the energy subsidies? Including
the energy subsidies for the coming month, because you cannot explain to the people that they have to pay for this increase of prices.
Minister, talk to me a little bit about what that means for debt. So going into the next 2 to 3 years, how do you see the French debt going compared to fiscal stability?
I think that the French debt will go down, and it is already the case. I just want to underline how efficient the political and the economic choices we have made, I mean all the 27 member states, have been efficient over the last month. We decided to protect our companies and to protect our employees. The result of that is that we have a very strong economic rebound, more than 7% in France in 2021, which means more tax revenues, 20 billion euros. We decided to devote all those 20 billion euros of tax revenues to the reduction of public debt and to the reduction of public deficit, which means that we will come from 115% of public debt to 113, and from a level of 8.2% of public deficit to 7%. Having more growth is the best way of reducing your public debt and your public deficit. It's not enough, but it's the right starting point.
Ministers, thank you so much. We'll go on to those numbers a little bit more. We'll also see what the Banque de France says on what France can do to even increase that 7% GDP growth. Bruno Le Maire stays with us. Now, coming up, we'll have more with France's finance minister. He stays with us for his look at the French economy. We talk taxation, we talk more about the debt, and we, of course, talk about inflation. This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. to recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Five years ago, a 39-year-old investment banker turned economy minister swept into the highest office in French government. The night he won, Emmanuel Macron described himself as a man of action.
We have the strength, the energy, and the will.
The will for an ambitious program of reforms. First, the labor market, a politically dangerous issue in France. The promise to make it easier to hire and fire was the first reform he pushed through. The overhaul of unemployment benefits also passed despite opposition from powerful unions. Second, fiscal reforms. Macron has delivered on gradually eliminating the residency and wealth taxes. He's lowered the corporate tax from 33%, the highest in Europe at the time, to 25%. His government also pushed for an overhaul of the international tax system, aiming to establish a global minimum corporate tax of 15%. But when Macron took on climate policy, things didn't go as planned. A proposed hike on fuel taxes unleashed the Yellow Vest protest at the end of 2018, which quickly grew into a nationwide anti-government movement.
People who support him will say that he has managed to make France more attractive, but within France there are certainly people who think he hasn't done enough to support those who are poorest.
Finance Minister Bruno Le Maire tried to stay focused with the so-called Pacte Law, a range of measures to simplify business creation and block unwelcome foreign investments, such as an attempt by a Canadian firm to acquire supermarket giant Carrefour. But when the time came for one of the most ambitious reforms, the pension system, the pandemic struck. From 2020, the whatever the cost mantra saw the injection of nearly 200 billion euros to protect businesses and save jobs. On top of that came a 100 billion euro package to help key industries recover. That also meant abandoning another election pledge to cut public spending and eliminate more than 100,000 public sector jobs. Consequence, the French deficit and public debt surged. Macron is now betting on a strong economic rebound, the fastest among the four biggest Eurozone economies, to replenish the state's coffers and to give him an ace up his sleeve in the race to the Élysée. Caroline Connon, Bloomberg News, Paris.
Well, that was Bloomberg's Caroline Connon looking back at the economic policies of Emmanuel Macron's government, including, of course, the finance minister, Bruno Le Maire, still with us for more on the French economy. So, Minister, thank you so much for staying with us. We were just hearing about some of the successes that France had been able to put in place through reforms. Growth, 7%. What do markets actually misunderstand about either French politics or the French economy going forward?
I think that they misunderstand our total determination to have more growth, our total determination to have a sustainable growth, and also our total determination to come back to sound public finances. And on the last point, I don't want to have any kind of misunderstanding. We want to have sound public finances in France to reduce the level of public debt, not only by growth, even if growth is the new starting point for coming back to sound public finances, but also thanks to structural reforms. We decided a reform on the labour market. We will decide and introduce a reform on the pension system, and also by reducing the level of public expenses in France. That's the programme on which we have been elected in 2017, and we will stick to that determination.
So, Minister, first of all, when you look at some of the pension reforms, what are we actually expecting from that? I mean, this is one of the hardest things to do in France. Will it get done if President Macron stays on?
It will get done, and I'm totally convinced that it will get done early in the mandate, because it must be a starting point for a new improvement of the economic situation in France. we need to have more people on the labour market. We need to have more growth to face the climate change and to have a sustainable growth. And I think that a large majority of French people are fully aware of the necessity of a pension reform.
If you look at the pension reform and the difficulties with that, I know Mr. Macron also promised to get rid of 120,000 public employees. That was extremely hard. Why was that so hard?
I think it's always hard when you are explaining that you must get rid of employees, either public or private. And I think that we need to change our approach. The idea is not to getting rid of public people. The idea is to be more efficient and less costly. That's our political goal.
If you want more stability on the budget, does it mean that tax cuts are off the table?
No, we need more tax cuts. We need more tax cuts for the private companies and especially for the industry. If you want to have a strong industry, you cannot have a level of production taxes that is more important, heavier than the one that you have in Germany or in Italy. You know that we decided with President Macron a reduction of the production taxes of 10 billion euros, and there is a need for more reduction in the production taxes because this is a too heavy burden for the French industry. You know, the key point is not the tool. The key point is the economic goal. Our economic goal is to increase the level of the French industry in the global French GDP.
But then, Minister, where did you get the money?
The money is given by growth. When you have more growth, you have more money and the possibility of reducing the level of public expenses, of public debt. We should always recall the failure of the 2008 crisis, when we decided as a solution to come back too early at too speedy pace to sound public finances, which means austerity. Austerity was a total failure. It led to less growth, less employment and more debt. Austerity is clearly a dead end for the European economy. So we must invent something new. And the point on which we are working, the new policy on which we are working with all the 27 member states, it's not only a French solution, it must be a European solution, is to find a new balance between investment and sound public finances.
Minister, I'm getting quite a lot of questions actually from economists that are watching this program, so thank you for everyone watching on TV and on radio. Also, hello to our radio listeners. Minister, what happens when there's the first interest rate hike from the European Central Bank? Is France ready, and is this going to be the main challenge for the next president?
Of course that we stand ready. We are fully aware that we are coming back to a normal political situation and a normal economic situation, which means that there will be changes in the monetary policy, and we are fully aware of that. But if there is a change in the monetary policy, we also need to have a change in the economic policy. That's the key point, and that will be at the core of the discussion among the 27 member states during the informal ECOFIN in Paris at the end of the week. We must not come back to business as usual. We just are out of the most important economic crisis over the last century. Coming back to business as usual would be a total mistake. We need investment. Investment for the fight against climate change. Investment to get access to disruptive technologies like the semiconductors, the electric car batteries, the cloud, the biotechnologies, which means that we need to find this new economic policy based on investment and sound public finances.
Minister, how many finance ministers are actually behind this? So we caught up with the Austrian finance minister a couple of weeks ago in London, who says there's more frugal, actually, countries in Europe than the four we heard a couple of years ago. So how much of a fight will you have on your hands?
I don't see so much frugal countries in Europe now. I'm just seeing countries that are investing in renewable energies and new technologies. I see the Netherlands investing 75 billion euros in a new investment plan. I see Germany investing 60 billion euros in renewable energies to face the new energy policy in Germany. I see France investing 30 billion euros in this new investment plan. So I see a large majority, not to say all the 27 member states, being aware of the necessity not to come back to business as usual, but to invest in the fight against climate change and in the key technologies that will allow Europe to play the same role than China or the United States. What do we want? Do we want to have our own supply chains like China or like the United States? Or do we want to be dependent on the semiconductors coming from Taiwan and the electric car batteries coming from China? We want to be independent.
How long will it take for that to happen?
It takes some years. It's a new strategy for Europe, but it will be a winning strategy. And that's the only one which will allow Europe to play its part between China and the United States. Let's have a look at the new globalization. The new globalization is based for the 21st century on independence. China wants to be independent. The United States want to be independent. Europe must be independent as far as the key technologies are concerned. I don't want Europe to be, for its automotive industry, for its aeronautic industry, too much dependent on the supply chain from South Korea, China or Taiwan.
Minister, I was going to ask you actually about Renault. Will France continue supporting Renault if they continue doing EVs in China?
I think that we made very clear that the French state stands behind all its key industries, Airbus, Renault, EDF, because they are at the core, or Air France, they are at the core of the French economy. So if there is a need to support any kind of companies in which the French state has share, like Renault, EDF, Air France or some other companies, we stand ready to support them.
Even if they don't necessarily play ball in trying to get some of the supply chain back to Europe?
They have to put some new supply chain in Europe and in France. And I made very clear to Renault, with the very good leadership of Luca De Meo and Jean-Dominique Senard, that they have to invest more in Europe, to create more jobs in Europe, and to have the new electric supply chains being in France and in Europe.
Minister, on Air France KLM, when are you expecting this operation to be done by? How quickly does it need to be done by so that they can function like a normal company and maybe take part in M&A?
It's up to Ben Smith to decide, and France is, the French state is one of the players that can provide support to Air France, but not the only one.
Minister, you're young. You're, lauded as one of the best finance ministers that certainly this country has had. Will you run for president next time around?
For the time being, I'm supporting with all my heart and all my belief President Macron, because I think that France needs stability, and the foreign investors need visibility as far as the economic policy of France is concerned. And they can take for granted that if Emmanuel Macron is re-elected, we will stick to that policy which will improve the competitiveness of the French companies and improve the attractiveness of France.
So you're not saying no? We'll see.
We'll see.
Is it fair to say?
You know the sentence by Shakespeare. If you can look into the seeds of time and say which grain will grow and which will not, speak then to me.
Minister, thank you so much for that. Also, a little bit of literature on a Monday morning doesn't hurt anyone. The French Finance Minister, Bruno Le Maire. Now, coming up, we'll, of course, continue our preview of the French presidential election. We'll dig into the polling data with Henri Wallard, Deputy Chief Executive of Ipsos. Now, let's check in on the markets with Tom in London. Hi, Tom.
Hi, Francine. What a great interview. No more tax or more tax cuts, no more austerity for France. That was a message clearly from the French finance minister there. In terms of how this is replicating at least the geopolitics and the continued focus on central banks through these European markets, an hour and a half or so into the trading session, you currently range bound across the Stock 600. There is still so much uncertainty about what is happening around Ukraine, given that the Kremlin has come out with a statement saying we haven't locked this meeting down between the two presidents, Biden and Putin, despite the hard work of the French side and Emmanuel Macron. In terms of the future stateside, still looking at gains of 0.3%. The ruble remains stronger, currently at 76, and Russian equities taking a hit, again, on the back of that line from the Kremlin, pouring some doubt onto the question marks around that meeting. You had some stronger data coming through in terms of European PMI, particularly on the services front. Plenty more coming up. This is Bloomberg.
待呢，为开春的时候，为各国运动员和随队官员，提供热情周到的服务。
This is Bloomberg France Decides. I'm Francine Lacroix here in Paris. Now, with under 2 months to go until the French presidential election, Emmanuel Macron remains the favorite to win. Polls show that the incumbent would actually beat any of his main rivals in a second round of voting, but the other likely candidate to reach the runoff vote is actually far from certain. A report from Ipsos puts Valérie Pécresse in second place, just slightly ahead of Marine Le Pen. But another daily poll actually indicates the preferences for far-right pundit Éric Zemmour are also rising. So joining us now is Henri Wallard, Deputy Chief Executive Officer and Chairman of Ipsos in France. Henri, thank you so much for joining us. First of all, how volatile are these polls?
Well, they are volatile because on one side there is a very close race between the three candidates which you just referred to, Valérie Pécresse, Marine Le Pen and Éric Zemmour. So that's in a way volatile because they are very close to each other. And as you mentioned, we published a poll where Valérie Pécresse was slightly ahead. But you know, as days and weeks go, this is a close race. This is the volatile part. Another one which is not so volatile is that we keep seeing Emmanuel Macron on the first seat, on the top place, with about 24-25% of the intent to vote, while the three I just mentioned, Valérie Pécresse, Éric Zemmour, and Marine Le Pen, are between 15 and 16%.
Yeah. So, I mean, I saw a number, which is there's an 80% chance that Emmanuel Macron gets reelected. I mean, given that we are February 22nd, what could happen from now until the premier tour on April 10th for Mr. Macron not to be reelected?
You are right. I think the anticipation, first by the voters, by the people we interview, is that clearly Emmanuel Macron will be in a position to run for the second step of the elections and as the highest chance to be elected. Then the scenarios are quite different in respect to who will be his challenger, whether it will be Valérie Pécresse, Marine Le Pen, or Éric Zemmour. In all three cases, when we ask now to people what would they vote, who they vote for in the second phase of the election, we see that Valérie Pécresse stands a bit higher, and second would be Marine Le Pen, and third Éric Zemmour. But this could change in a few weeks.
Mm-hmm. Henri, given what we're seeing and actually the strength of the economy here in France, does Mr. Macron just wait it out? He hasn't even officially said he wants to become president again. Is there a strategy, or does he just